U.S. risk assets up sharply higher today. NASDAQ up over 4%, S&P 500 up over 3%. This follows news from Treasury Secretary Scott Bessent announcing that U.S. and China is making significant progress on their trade deals. I think the line that a lot of folks liked was that both sides agree that the U.S., China, they do not want a generalized decoupling. And that means that you're going to have both economies still work together in the future. A decoupling means, yeah, we're not going to buy your goods in the future and you're not going to buy our goods in the future. That is a serious disruption in terms of the U.S. economy as well as the Chinese economy. And both sides are saying, yeah, we don't need that. We don't want to go there. And this is arguably a big indication of improvement in trade relations and also a significant improvement in tariffs. And you're seeing the tariff levels go from 145% down to closer to like 30%, China going, down to around 10%. So looking at a huge reduction in tariffs, that means that that potential consumer tax that you would see in the weeks and months ahead, which could be like one of the largest consumer taxes, in decades, that is a whole lot less likely to happen because that 145%, tariff, that they're walking away from the ledge. That's not going from effectively a complete embargo of Chinese goods to, hey, maybe we can have a working relationship. So you have this sort of 90-day pause to figure it out with lower tariff rates. Still significantly higher than before, but much lower. This means we can actually do business because previously with the 145% tariff, you had seen a near collapse in terms of cargo traffic. For example, LA port seeing cargo traffic down around 35%. That was a report from just earlier this month. And this story directly coincides with the odds of a U.S. recession going from over 70% or around 70% to now 40%. I think even dropping a little bit below that. This is a significant chart. This is a significant development in terms of the betting markets that I think a lot of people need to recognize. This could drive the beginning of a bull market rally because I'm not saying for sure it's going to happen. With macro, it's always a lower certainty, lower probability. And then you have the administration every day. It's almost like a new policy. So it is important to recognize that macro, there's a lot less certainty. That's not the game I'm personally playing. I'm looking for quality companies, potential multi-baggers that I can own for years or even decades at a time. That's my goal. And, I have a checklist that I follow to find those companies. This is more of macro assessment and looking at some of the two of the recent big bets that I thought were interesting that also ties into the macro. So I'm going to talk about that in this video. But this chart talking about the recessionary dynamics, this is important because, as you saw those recession odds go up, that means the valuation multiples should also go lower because folks are saying, wait a second, if there's going to be a recession, could that mean lower sales, much lower profitability in the future? Now that that's completely unwinding, going from 70% to 40% or below, that means maybe investors say, hey, risk on, this is good. And that's why you're seeing that sharp rally today in U.S. risk assets. And you can see it across, looking at a cross section of different companies. Shopify, this effectively enables trade with millions of merchants and consumers around the world. They were hit hard because tariffs are obviously going to, reshape a lot of businesses. And yet they recovered sharply today, or up, I think, around 14%. So year to date, around flat. MGM, another example of risk on type of assets. That's a gambling company. This is for, folks that like to go into casinos. That also is around 0% for the year, because once again, the risk on animal appetite did pick up in response to this news. This says, hey, if there isn't going to be a recession, that means more money in people's pockets. They can go to a casino, gamble, and then the house gets their cut and, business does better. So that's why you can see even these very unrelated businesses have had a very similar trajectory over this year because of these dynamics of recession, fears tied to tariff wars and trade wars, and how all of a sudden you start seeing a sharp recovery in response to those trade wars going down significantly. One asset that's very interesting to follow is gold, up around 23% year to date, down around 3% today. So there's really two interesting components to this that I think it is worthwhile for investors to think about. One of which is the risk off bet, where investors are saying, hey, recession, I want to put my capital somewhere that could actually appreciate in this environment, and maybe you get other, the greater fool theory, maybe more people go in and bid it up because it's perceived as a risk off asset, in which case that's one element. Recession odds go up, Therefore, people buy gold. The other key aspect that I think is worth monitoring is the U.S. fiscal situation is very tricky. Talking about annual deficit of around 6-7%. The current administration goal is to get it to around 3%, but no promises, no guarantees that they succeed in doing that. If you have a situation where interest rates all of a sudden go significantly higher than what they're comfortable with, keep in mind, there's already, tens of trillions in U.S. fiscal debt outstanding. Having a higher interest rate, and interest rates did go higher today, having a higher interest rate could create real problems for that refinancing of that debt and budget, annual budget deficits. Because as your interest expense goes higher, that makes the deficit worse, especially when you have, $20-30 trillion in debt outstanding. So you could see, and this is, I think, part of the reason why gold has rallied, you could see an initiative of yield curve control. Effectively, the U.S. government saying, hey, we're going to print money to buy bonds and keep rates artificially low because it then helps everything else. You could see that, and I think it's that lottery ticket that's causing the price of gold to go higher. This perception that the U.S. might be forced to do something like yield curve control, buying bonds with printed money to effectively keep interest rates at a comfortable level. That is an option. It wouldn't be the first time you've seen that. You effectively saw that indirectly, or you saw a different version of that with quantitative easing following the great financial crisis. If you were to have a spike in interest rates, I think all tools are on the table. And Treasury Secretary Scott Bessent has alluded to that as well, that, the Treasury Department would try to figure out something like that to make sure yields stay at a reasonable level. And so I think that dynamic is part of the reason why gold is having such a strong year, up around 23%. So what are two big bets I've seen just this past week that directly ties with this macro framework, in terms of what's going on? The first big bet is from Electrum Strategic Resources. They purchased around $50 million of NovaGold resources. This ticker is NG. This is interesting for a couple of reasons. So first of all, this purchase was part of a private placement, I believe, along with a secondary offering for around $230 million that NovaGold did. And they're using the proceeds to buy an incremental 10% ownership in Donlin Gold, which I believe is already 50% owned by Barrick. So this bumps it to a majority stake for NovaGold. So this is a gold company buying gold resources, a gold asset, and this is already the top holder in NovaGold saying, yeah, we want to commit another $50 million into this company. So that's interesting to see. It's also interesting to see that the second largest holder is Paulson. I believe that's related to John Paulson, the very successful hedge fund manager, billionaire who profited during the great financial crisis with his subprime bets. So it is interesting to see these gold bets on NovaGold, with the top holder buying more of this company. It makes me want to learn, what sort of the upside is. So Donlin, this is one of these gold assets in Alaska. Alaska is the second largest gold producing state in the United States. The Donlin Gold mine, I think it's a project that's in permitting. It's not yet a producing mine. So this is more of a speculative bet, more of a speculative asset. But you can see there are a lot of producing mines already in Alaska that's producing gold. Management estimates that based on effectively current gold prices, the value of this mine is potentially tens of billions of dollars, which is interesting because NovaGold is only around $1 billion market cap. So this could suggest significant upside. Kaplan, who is the chairman, also who runs this Electrum fund, who was making this incremental purchase, was recently quoted as saying, he was saying, my first stop is I want to see us get back to the $4 billion market capitalization, because previously it was around that in 2020, and that his goal is then to double it from there, to go from 4 billion to 8 billion relative to the $2 billion market cap now. That does suggest multi-bagger potential for NovaGold. And so it is interesting to see this top holder putting in an incremental $50 million. That's a big bet that directly goes into this sort of environment, thinking about the macro. Personally, I don't like these more speculative plays. And this is an example of, once again, an asset that's not yet producing. It's not, generating revenue. It's purely generating expenses. So it's a little too risky for me, even though it does have that multi-bagger potential. Next, we're going to talk about the second big bet I've seen just in this past week that once again ties with some of these macro themes. But first, a quick plug. And as always, none of this is financial advice. I'm just sort of sharing what I'm seeing in the markets. And so also recently, Sam, a premium member of the Unrivaled Investing community, he shared the following. Daniel, just re-upped my annual subscription after 1 year of being in the community. The subscription has paid for itself many times over. There's no doubt it is a worthwhile investment. This follows Matt, who previously wrote, Netflix, Spotify, and Unrivaled are the only subscriptions I'll never cancel. Seriously, this is an incredible value. You've helped me and my wife comfortably take time away from work to travel, and I had the financial confidence to start a business of my own, even without any income for 2 years. My portfolio is still up. These types of stories really makes my heart sing. And so if you're interested in potentially compelling ideas, come check out Unrivaled Investing. The pricing for Unrivaled Investing is going up at the end of this month. So now is the time to lock in the favorable rates. That's unrivaledinvesting.com. The second big bet I've seen just this past week is in Heartland Express stock. HTLD is the ticker, where I'm finding that the wife of the founder buying around $3 million worth of the stock, the son who's currently the CEO buying around $1 million recently. And this did cause the stock to jump a little bit higher, but still overall, Heartland Express shares have been in the doldrums, down around 34% over the last few years, it looks like. And, you do have this sort of jump in response to this insider buying activity. But I think this being in such a downtrend does reflect that this is a logistics company, inherently difficult, and the environment that they were facing was getting increasingly, more challenging. So when you think about Heartland Express, you're talking about a truckload transportation company for either long haul or regional, transportation. Very, very tough business because, anyone can buy a truck and try to compete. I do not like low barrier to entry type of businesses. And I think a key part of the reason why the stock is down is you see it in the fundamentals. You can see revenue was declining significantly recently, where operating revenue less fuel revenue was down from 234 million last year first quarter to 193 million. So that's a weaker, logistics environment, a weaker trucking environment, and they did report continued losses. So I don't like seeing this type of setup. I prefer companies that have consistent profitability, but I can understand why management is making this bet. They're looking at their balance sheet. They have nearly $800 million in effectively trucking assets, property, and equipment, and they only have around $200 million in debt. So they could easily go to their bank and say, yeah, we want to borrow more against, this tangible products that we have, this tangible, assets we have, which is their trucking fleet. And so it wouldn't surprise me if you could see, more leverage, or an intelligent buyer could say, yeah, we could, easily squeeze some cash out of this if we wanted to. And I think another key aspect, seeing the family, buying millions of dollars more in Heartland Express stock as it's fallen, is looking at the price to book ratio. In that recently it did fall under 1 times. It was around 0.7 times when the insiders were buying. Now it's around 0.9 times, which is really a question of, hey, could this business, recognizing it's just like NovaGold, it's a commodity, trucking is a commodity. Could this commodity type business generate a adequate return on equity over time? Maybe 5%, maybe 10%, maybe 15%. And if so, then buying it at or below book value could be attractive or worthwhile. Personally, as I look at NovaGold and I look at Heartland Express, neither of which really fit my personal investment checklist, where I think, and I run this on all companies, whether or not it's $1 trillion company, insider buying, micro cap, nano cap, any company, I'm looking at it through this framework. And for both companies, it's just too hard for me to think about the growth potential for either of them when you're effectively a commodity business. It's just too hard for me, even though you do have aligned management in both situations where the top holders are buying more, which is what I like to see. Overall, I hope this video talking about the macro, what's going on, the recent developments might be leading to a, an actual bull market rally. We'll see. Macro is very hard to assess. That's why I focus on individual companies, as well as two of the recent big bets I've seen with NovaGold and Heartland Express. If either of those are interesting to you, I'd absolutely love to hear it in the comments below. And if you're looking for what I'm personally sharing on my own investment journey, come check out unrivaledinvesting.com. Thanks so much for tuning in and watching.